Welcome to the Market Alert for Friday the 3rd of June 2016. So in the pre-market session we had a lot of economic news as we reported on yesterday morning, and you can see the market's reaction there. The market moving lower. This is the live chart that's actually currently showing here. The signals were exactly the same in the historic one when I loaded it, but I thought I'd just go through this one just to bring out a few points. So I'm just going to fast forward. We had a potential buy signal at the start. This one wasn't filled within the 3 bars and the stop was hit first, so that one was cancelled. The market then traded sideways. We had a second buy signal. This one was actually filled, and the market then moved up, as you'll see in a moment, up to the scalp just before we had the release of the crude oil figures, and that's what the vertical red line is there. So you don't want to be in the market with the crude oil figures at the moment. As I said before, it used to be a medium impact news item. It's now a high impact news item and has been a very important news item for market direction for the last 4 to 5 months, as crude oil hit a low and then started to move back to the upside. So now the stock market's using the crude oil figures to determine direction. So we have a potential sell signal there, which we'd ignore because we've got the news out, and then the news is released into the market, and then you can see there the spike as the news came out, and then the market trading up to the scalp, which you'll see in just a moment. That one I wasn't in because of the economic news, but so far one trade, and if you're happy to leave that for the day, then there's not a problem. Like I said before, never apologize for taking a profit. But as we head on to towards the evening session, we had a potential sell signal there. The market coming back and hitting the stop on that, so that cancelled the short side, and then we see the buy side being filled just below the psychological level there, as prices then move through and eventually hit the scalp there. Prices don't drive through, so that's the point you want to consider taking profits. And after that I got bored and decided to leave for the day, as the market was just trading sideways. There was no point in actually sitting here. So you'll see the market just in a sideways range, and then stop recording there. So going back to the actual chart, I'll just drag this in so you can see it. There's the full picture of the session, exactly the same signals there. In the daily chart, we've got prices stuck in this sideways range. You can see it here. The volume's increased over the last couple of days, which is interesting. They're doing the damnedest to keep this to the upside. The overnight market very quiet, which you can see with the narrow range here as well. News-wise today, what have we got from 1:30? Trade balance, average hourly earnings. We got the big one today. This is the one the Fed's going to be looking at. It's the non-farm employment change. This is out at 1:30. They're forecasting a 159,000 new jobs. The employment rate to drop to 4.9. Then we've got the ISM manufacturing at 3 p.m. and factory orders at 1.8. So 1:30 today is the big one. This economic news item, the non-farm payrolls and the FOMC meeting, are the 2 big ones in the market, and they're about 2 weeks apart as well, which is interesting. So watch out for this one at 1:30. The markets will be closed, but you should get a decent reaction if the forecasted figure is less or greater than that which we had the real figure is greater or lesser than the forecasted figure. So again, wait and see what happens at that time. And in the implied volatility, this dropping down yesterday to 11.16. You can see this in the chart. We're still trailing along in this sideways motion at the bottom, and that's because the underlying market is also quiet. But as I've said many times before, this indicator is invaluable. When the implied volatility gets to these lows, then you can expect some serious breakout to the downside. It's never failed yet since uncovering this in 1993. When implied volatility goes to lows and to historic lows, the underlying market will 100% make a significant move. The only thing that it doesn't show is the date and time, unfortunately. But other than that, we at least know where we are in the cycle of the market and what we can expect coming down the line, and that's what's important, being able to forecast and predict what is likely to happen. Again, if you go back to the market alerts from July of last year, you'll see exactly the same thing that I spoke about, and then we had it. So again, I can't make this point too strongly that we do have an issue coming, but I suspect it's going to be after the Fed report on the interest rates, unless of course they want to sink the market first and then bring it back. It just depends, and again, we can't forecast that, but we know something's coming. It's just a matter of hanging in there and waiting for it to arrive. Right, that's it for today and also for the week. It's been a reasonable week actually, given that the market is stuck in this sideways range and the momentum just seems to be quite nice at the moment. Not too many losing trades at all. It's been a reasonable week given that we had the bank holiday on Monday as well, both here and in the US. Right, that's it for this morning. I will see you in Monday. Thanks for watching, and see you in the next one.